Hello traders and welcome to the webinar. My name is Darren. If you can hear me, please type in a chat box on the right side. This will be our first time hosting a Google Hangout. So I hope that we're starting to get familiar with this feature on Google Hangout. So hopefully everything goes smoothly on Google Hangout. So if you can hear me, please type into the chat box on the right side, just to confirm that all of you can hear me. No responses. Probably, just let me recheck. So traders, if you can hear me, please type into the chat box on the right-hand side, just to confirm everything is working well. Okay, let's continue with today's webinar. So in today's webinar, we'll be talking about a few trades that we made on April 2016 on Apple, NASDAQ, SPX, and Russell. Okay, and we will teach you how to use tiering entry and exits to increase your trading performance and margin of error. So when it comes to trading options, a lot of time you might be right in the direction of the markets, but your timing might be a little bit off. So by using tiering entry and exits, it helps you to average in the entry of the strike prices of the options you entered. Okay, so I will also go through a few trades that we have. A few latest trades on the S&P 500. So as you know, if you refer to the traders report, we have a bear market rally on the S&P 500. Okay, so how do we tap this kind of opportunity when it comes to a rebound in the market while the overall trend is bearish? Okay, so let's look at April 2016. It's been a good month. In fact, March, February, January 2016 was an even fantastic month because the implied volatility on January, February, towards the middle of March was high, and we were selling a lot of credit spreads. So in times like this, you can see most of the stocks, most of the index will be having a low implied volatility. Okay, so when it comes to low implied volatility, we will be executing on trades or on trades that uses a specific strategy to capitalize on low implied volatility environment. Okay, so April we have Wells Fargo took profit about 56% based on the margin we put up. GLD, USO, Freepop. Russell, we closed this trade out early, took a stop loss. We got stop out with a stop loss and with a minor loss, while other trades like GLD, USO, FCX, Wells Fargo all went in our favor. Okay, so I'll show you step by step how we establish a vertical spread when it comes to identifying alley wave analysis on major trends. For example, Apple was a very good trade a few weeks. That was, I believe, two and a half weeks ago, where we shorted Apple. Right after that, Kaiken, the investor, billionaire investor, unloaded a lot of Apple shares, and Apple dropped even further. Okay, so the question is, how do we capitalize on a very high probable wave count? Okay, and where do we determine the strike prices when trading options? Because when we trade vertical spread, the strike prices will determine a lot of factors, whether that vertical spread work in our favor or not. Okay, so in this webinar, hopefully I'll show you step by step. And the second half of the webinar, I will show you how to use the latest analysis on SPX, NASDAQ, and a few other signals that we have. Okay. So when it comes to trading waves, a lot of people, you look at this video, it looks very dangerous, but that guy knows what he's doing. So you're hoping that this guy will drop in the water or just sleep, but he won't, because he's a professional. So you have to increase your alley wave trading skills or knowledge. Okay, like that. Okay, so that is one of the most satisfying, I would say, wave that we captured on Apple, NASDAQ. So it's very close to how those sportsmen or surfers capturing a wave. Okay, they wait for a large wave, capitalizing, just surfing all the way through, while a lot of people think that it's very dangerous, but they know what they're doing. Okay, so you as an alley wave trader, okay, all you have to do is identify those high probability patterns and execute on your trade. Okay, so I will use a few stocks. I'll give you a few examples. Okay, how we traded those trades and how we captured that wave movement, and how do we exit. When do we know the wave is ending, and when do we know the target, the profit target that we're setting? Okay, all right. So the first tiering entry will be digressive tiering. Okay, where tier 1 you'll be risking about 8%, tier 2 will be 7%, followed by 6% for tier 3 and 5% for tier 4. Okay, if you're a moderate investor, your risk appetite moderate, I'll be taking about 5% for tier 1, 4% for tier 2, 3% for tier 3, 2% for tier 4. Okay, if you're a conservative trader or investor, okay, I will recommend 2% for tier 1, tier 2 1.5, tier 3 1, tier 4 0.5. Okay, so all you have to do is type in your latest capital into the spreadsheet that we send you to calculate what is the maximum risk for every tier. Okay, so this will be an example. If I'm starting with 10,000, Okay, my tier 1 4% will be $400. 3% will be 300, 2% will be 200, and 1% will be 100. Okay, so that 400 will determine the max risk for any given vertical spread that you're establishing. Okay, so let's take an example on April 12th, 2016. We have a resistance at 61.8, okay, forming wave D. So how do we capture from wave D to wave E? Okay, so for the next few minutes, I will need you to pay attention to this video. The steps, okay, that you are supposed to deploy when it comes to a trade like this. April the 12th, Apple, how do we capture wave 4? How do we identify wave 4 turning point? Okay, so your first step is to draw a fib retracement from 100% to the lowest point 0%. So when you first click, there'll be 100%, and when you second click, that will be 0%. Okay, so the ratio that we are focusing on will be 61.8, which is the golden ratio. 0.8, I'm changing the width of the line, changing the color to red so that it's more visible. Okay, so Apple on April the 12th, Apple is hitting 61.8 retracement. Okay, so let me just pause this video. All right, so to get wave D, okay, all you need to do is to draw a retracement. Your first click will be 100%, second click 0%, in between you get 61.8, which forms wave D's turning point. Okay, so with that information, I'll be able to establish a bearish vertical spread. Okay, say we are taking about 31 days expiration. Apple, strike price will be 111, 112. Nope, debit spread. So it's going to be 112, 111. Okay, so this will be tier 1 entry, 4%. Okay, 4%. My max loss 580. Okay, so we have this position on 31 days expiration. So next, fast forward a few days to show you how this pans out in our favor or not. Okay. So 3 days later, it seems that Apple is going against us. Okay, now here's the takeaway that you can have is to enter tier 2. So a lot of traders will be second guessing the system, will be panicking at this point. Okay, we will be entering tier 2, and that'll be 3%. Okay, so this is when you decide, okay, to average in collecting more premiums with the same strike price. Okay, so tier 2, we are entering. Same steps, click on trade. Right click. So debit spread we're doing because the IV rank was low. Okay. So put debit spread with a strike price of 111 and 112. Okay, so now I have tier 1 and tier 2. So I'm just waiting for tier 1 and 2 to go into the green box, which is my profit zone. Okay, so April the 19th, let's check, right? Apple finally wave D has been completed, and now tier 1 and 2 is moving into that green zone. Okay, so both tiers are profitable now. Okay. All right, so I can take partial profits, or about 50% of the total contracts that I have on Apple, okay, to secure, to take some money off the table. So to do that, what you can do is right click, create closing order, okay, instead of the max quantity that I had was 20 lots or 20 contracts, okay. So to take half the profits off, I'll be clearing 10. So you have to type into the trade entry box 10 contracts, okay. So now you're taking some profits off. So what to do next? I'll be leaving tier 2 to expire in my favor, just to capture a little bit more profit. Okay, so anything more than beyond this point will be a bonus. All right, so the question is, how do I know, how do I gauge the profit target for tier 2? Okay, so let me just slow this down. Now, to check the profit target of tier 2, or the profit target of Apple, since Apple is moving in our favor. Okay, so now I want to know, when is Apple turning? Apple is dropping like crazy right now. Okay, so where's the target where Apple is likely to reverse and move higher? Okay, so what I can do is to click 100%, somewhere at the lows. Okay, second click, 0% will be here. Okay, so in between, you'll be getting 50%, 61.8, 78.6. All right. So the target that I'm looking at will be 50%. Okay, so I'm changing a color of 50%, the rate, so that it's more visible. So that will be my profit target for Apple. Okay, so you can either place a conditional take profit order, or it's a debit spread. So, you know, we have 21 days to go. So you can either wait for a few more days, see how it pans out. Right, so in actuality, Apple breached the 50%, even 61.8%. So it hit 78.6, just because Apple was losing money after it's, you know, they found out that Apple's losing a lot of sales on its iPhone, and, you know, because of that, for that reason, Apple dropped even more. Okay, and that's good for us, because our tier 2 went into the max profit, okay, above and beyond the max profit. Okay, so if your vertical spread is at the max profit, and if you look at the position having another 16 days to go, I just close it out. Okay, do not wait for the expiration. All right, 16 days is 2 weeks. That's a long time. Okay, so what I do is just close it out, because since Apple was hitting the max profit. Okay, right, so that was how we captured from wave D to wave E. All you need is 1 to 2 trades like this in a month. Okay, do not need a lot of trades. We are not day traders when it comes to option trading. Okay, what you need is to understand basic alley wave theory and to capitalize on a wave like this. Okay, so in the more advanced module, I teach you how to even minimize the risk on every of your vertical spread. Okay, so that will be Apple. Let's move on to Freepop. Freepop April 11. So just one day before signal for Apple came out, we had Freepop 3 hours chart. It was a bullish trade setup. Okay, so I'll show you step by step how to capitalize on a given wave from wave 4 to 5. So Freepop, I believe we have a few traders having the same trade on FCX. Okay, now just hold on a second to see all of you are. Right, I'm not getting any comments from you just because this is our first time using Google Hangout and the Q&A seems to be disabled. Okay, so I'm having a hard time enabling the Q&A, but chat is on. So if you're hearing me, just type in the chat box, or if you have any questions, just type in the chat box. Okay. All right, that's weird. There's no responses from the floor. Okay. Anyways, I'm gonna move on because this is a recorded webinar. Okay, so you can still access this on tomorrow. Right, Freepop, how do we capitalize wave 4 to 5? So Freepop, I will show you step by step how to get the turning point of wave 4, right? So to get wave 4, click on drawings, click Fibonacci retracement. So what I'm gonna do is click on the lows of wave 2, and second click will be the highest point of wave 3. Okay, so in between I'll be getting 23.6, 38.2, 50%, 61.8. All right, now the ratio that I'm looking at will be 38.2. Right, so Freepop did test 38.2 and it rebounded. Okay, so to establish a vertical spread on Freepop, okay, I could be establishing a strike price slightly lower of 38.2. Okay. Right. I think I'm getting some responses from some of you. Just let me check. Right. So my first click will be 100%, second click will be 0%. In between, I'm getting 38.2. That is my turning point for Freepop. Okay, for wave 4. So I'll be highlighting 38.2, increasing the width. And there you have it, 38.2, wave 4. Okay, so if I were to establish a vertical spread, the strike prices could be 8, 9. Okay. All right, sorry for the pause. I'm just checking if the chat function is working or not. Seems that it's not working. Okay. So Freepop to capture wave 4. Right, so Freepop wave 4 complete. Now we are moving higher. Okay. And into the green box. Right, thanks for comments. I think I'm getting some responses from some of you. I'm not sure why my desktop Hangout is not showing any messages from you. Okay. So Freepop expire in our favor. And as you can see, there's 1 wave, 2 wave, 3 wave, 4 wave, another 5 wave, 5th wave. We're expecting a 5 wave movement to the upside. Okay. So let's fast forward to see whether that 5 wave is complete. All right, so there you have it, 1, 2, 3, 4, and 5. Okay, so that's for Freepop. Right, so step 1 will be identifying the wave patterns. Step 2, you use the feed retracement to identify turning points, okay, of the wave patterns. And that's where you will be able to establish the right strike prices. Okay, so most of the time, I'll be choosing the support or resistance level as my target zone. Okay, so let's look at EM, let's look at FXA. So for example, EM, we are in wave 2. How do you capitalize from wave 2 to wave 3? How do I identify wave 2? Okay, so if you look at EM, right? How do I identify wave 2? So let me just collapse this. Take this out. So this will be 0. This will be 1. Okay. So the question is, we know that although EM is very weak, how do I get the turning point of wave 2? Okay. So to do that, I'll be drawing a Fib retracement. Click on drawings, Fibonacci retracement, 0 to 1. Okay. So in between, I'm getting 38.2, 50%, 61.8. Okay, so 38.2 will be a level I'm looking at. If this holds, if 38.2 holds, okay, most likely we'll see a rise in EM. Okay. So that pattern will look like this. All right, wave 2. And then FXA, same thing. We have an ABC correction for FXA. So the first thing to do is plotting those wave counts, 0, A, B, and C. Okay. Drawings, text node, 0, A, B, and C will be probably up there. Okay. So the question is, how do I identify wave B? So first, click on drawings. Fib retracement, 0 to A. We're hitting about 50% retracement. Let me just thicken the line of 50% so that it's more visible. Okay, so if I were to establish a vertical spread on FXA, okay, I'm expecting FXA to rise from B to C. Okay, so this will be my first wave. This will be my second wave. It's a corrective ABC pattern. Okay, A, B, and C. So to get the turning point of wave B, okay, we'll be using 50% retracement as our benchmark. Okay, so now FXA is IV rank about 44%. The IV rank. Okay, so I'll be using 73 or 72 strike price. Okay, so the first thing, I'll be going to the Dole platform to check the risk and reward for FXA. You know, this is the first webinar that we have. Is more like a one-way communication. I'm not sure if all of you can hear me, or maybe, you know, I'm like Helen Keller. I cannot even hear. I'm speaking just one way, and it's just, oh, more comments are coming in. Just hold on. All right. So FXA, I would say it's borderline between selling a credit spread or a debit spread. So let's check spread. Sorry, a long call vertical for FXA. Just pick 36 days, okay. 74, nope. What about 72, 73? All right, so the risk and reward is not looking very good. So 73 and 72 means that if FXA rises above 73, okay, anywhere in this green box, the vertical spread will be profitable. Okay, let's do a 74 and 70. All right, it's okay. 44, 56. So 56 will be the margin that I'm putting up, okay, to establish this debit spread. All right, now a more technical level to simulate the risk profile of FXA. This is how you do it. Click on Analyze FXA. Okay, I'll be selecting the same expression option chain. Analyze by trade, vertical. The same way how you are keying in an entry for vertical spread. Okay, so the strike price is 74 and 73. 74 will be a sell leg, and 73 will be a buy leg. Okay, risk profile. Okay. So once that is done, just click on risk profile. You'll be able to see the vertical spreads risk profile. Okay, that's for FXA. All right. Now the bottom line is you're trying to identify the turning point of wave B. So to do that, I'll be drawing a fib retracement from 0 to A, 50%. Okay. This will be a turning point for wave B. Right? So that will be for FXA. So let's look at the latest report. So on May 12th, we have S&P, we have Netflix, we have NASDAQ. All right, so I'll go through step by step, and I'll show you how to do simple analysis, how to establish the debit spread or credit spread depending on the IG rank. Okay, and let's dive in to S&P 500. So S&P 500 for the past few days has been going up, forming wave B. All right, so I just focus on the major wave count like A, B, those are major wave counts. Okay, so go to your Thinkorswim platform, plot those A, B, and C. All right. Now, before I go into the latest wave count, as you can see, this was plotted before the drop in S&P 500. So we had wave 1, wave 2, wave 3, wave 4, and then 5. Turning point was 61.8. Okay, that forms wave 5's top. And that's how we capitalize on the S&P drop. That was April 21st. April 21st. Okay. And let me show you how to capitalize on the latest wave count B. Yeah. Although you might be late because the ideal entry for this bearish wave is supposed to be yesterday when the market was open. Okay. But I'll still show you step by step how to identify wave B. All right. So this is a 1 hour chart. So I'll be switching to 1 hour on the TOS platform. And on your 1 hour chart, just plot A and B. Okay. Let me take this out. Right. So that'll be drawing text node A and B. All right. So the question is, how do we identify the turning point of wave B? Okay. So what I'm going to do is click on drawings, Fibonacci retracement. I'll be using the highest point to the lowest point. Okay. So the golden ratio will be 61.8. I'll be changing the width. Okay, 61.8, which yesterday so the reason why I'm showing you this is because you're supposed to be prepared to be entering the market at 61.8, forming wave B, not chasing the market right now. Okay, So what I'll be doing is to place a pending order, assuming the S&P is rising. All right, now we have wave A. I'm identifying wave B. So C will be probably at the bottom. Right? So the question is, how do I capitalize on this movement from B to C? Let me change the line to a bright yellow line so it's more visible. So the question is, how do I capitalize on this move from B to C? Okay, so the first step is to identify A and then the turning point of B. So to get B again, draw a fib retracement from here, the highest point, the lowest point. Your golden ratio is 61.8. I'll be placing a pending order. Okay, I will not be staying up all day to watch this, to watch the market reaching 61.8. So instead, I'll be placing a pending order at this level, right at the 61.8 level. Okay, so to do that, what I can do is click on Trade SPX. Okay, let's say we do a 20 days expiration. Now this is how you can automate your trade instead of waiting for the markets to hit a certain point, right? At the same time, you're increasing your profit potential for every single trade, fine-tuning your entry and exits. Okay, so say we are doing a 22 days vertical spread buy vertical, a debit spread. So it's going to be a put debit spread, right? So we know that if SPX rises to 2083, my vertical spread will be triggered or activated. Okay, so step one, the same way you're entering a vertical spread buy vertical, so put debit spread. Okay, so the strike prices will be 2083 and above. 2083. So we have 2080 and 2085. Okay. So once you establish 2080, 2085, it's a gear button on the right hand side. Click on gear button. Okay, change the condition. SPX, if it moves at or above the 61.8%, which is at level, let me check. Sorry, being forgetful. 2083. So buy vertical condition will be 2085, 2080. Okay. So the condition is that if S&P reaches 2083, this vertical spread will be executed. Maybe the risk and reward will be 1-to-1. The risk and reward will be 1-to-1.5. So if you enter now, probably you'll get much less profits compared to the first scenario, how I automate the trade. Is my trade triggered? Yes. Okay. So I placed this trade on yesterday. Now it's in the profit already. Okay. All you have to do is move the stop loss to 0. Okay. And then my green box will look like this. As long as S&P is in this green box, the vertical spread will be making a profit. Okay. Right. So that's for S&P. Let's move on to NASDAQ. NASDAQ, A, B. So question is, how do I get wave B? All right. So I'll show you step by step. But first, you have to plot the wave counts. All right. To give you a context where it's NASDAQ moving. NASDAQ. A, B, and C. So this will be A. This will be B. And C will probably be at the bottom. Right? So the question is, how do I get B? So to get B, okay, I'll be drawing a fib retracement from the highest point to the lowest point. Fib retracement from the highest point to the lowest point. In between, I'm getting 38.2. So 38.2 will be a ratio I'm looking at. Okay, so to automate a trade like this, to automate a bearish vertical spread on NASDAQ, okay, same step, I'll be clicking on trade NDX. Condition is if NASDAQ hits 93.94, this bearish vertical spread will be activated. Now, of course, now if you enter, you'll be collecting much less premium, all right? So the reason why I'm showing you this is because most of the time you have to enter a pending order to automate your trades. And also, you know, most of the time, it reduces a lot of stress when it comes to trading, okay? You do not have to stay up all night, all day to watch the markets hitting that point or that level that you are setting, right? So it's going to be the same step. NDX put, that will be 4,400, 4394, 4394. So we'll be doing 1995. Okay. All right. So the condition will be NASDAQ, if it rises at or above 1394, this bearish vertical spread will be executed. So you have to click save, confirm and send. Okay. So that is how you automate a trade like this. So NASDAQ, I believe I have 2 orders that was triggered. Okay. So green box will look like this. So if you look at NASDAQ, S&P 500, this is a bear market rally. It's been very weak, okay? And so we are using alley wave plus fib retracements to get the turning point of wave B, right? And then we have gold. Gold has been very, very choppy, so I'm gonna put this aside. I'm not gonna trade anything on gold, right? Netflix could be heading into a triangle. So Netflix, let's look at Netflix. So Netflix, we have A, B, C, D, and E. So E will be the final wave of the triangle. So let's plot A, B, C, D, and E for Netflix. They'll be on the weekly chart. So this will be super slow, probably for another few weeks. You'll be waiting for a few weeks for this triangle to be formed, but I'm just showing you how to plot, how to calculate a triangle pattern like this. Okay, so Netflix could be dropping lower because if you look at NASDAQ, it's been very weak. If you look at most of the tech stocks, it's been very weak, and a lot of investors are waiting for those technological stock to act weaker before the hedge funds short it. So it's not looking good. If you look at most of the tech stocks are overpriced. Okay, and I'm not sure if the triangle is broken. Some of the hedge funds might be shorting tech stocks like Netflix, Apple's. You saw Apple a few weeks ago. Kaiken saw a lot of his shares, and people are not really happy about that. But that's how the way the market works. All right, capitalism. All right, so Netflix, A, B, C, D, A, B. So A will be probably up there. B, C, D, and if Netflix goes sideways, you'll probably see a bounce into wave E. But again, if there's no high probability patterns, just do not trade it. Simple as that. Okay, keep your capital intact. Right? Most of the time in times like this, like we capture a few trades on Apple, NASDAQ, keep the profits. Do not overtrade. A lot of people, they tend to overtrade, giving back the profits. Okay, with patterns like this, if you were to ask me to trade Netflix from wave D to E, I would not even consider putting on the trade because there's no high probability pattern. Okay, so a lot of time you do not have to trade just because you saw a pattern like this from wave D, E. It is not a high probability pattern. Okay, a high probability pattern will look like what we show you on Apple, NASDAQ, S&P 500, right? So if you were to compare S&P 500 and Netflix, I'd rather short S&P 500 than Netflix. Okay, so you have to check the main trend and then plot the wave counts combined with your FIB ratios to give you a benchmark, likely turning point to set your strike prices. So trading options is not supposed to be complicated. A lot of people thought, right, Elliott wave, you're combining FIB retracement plus vertical spread. Yes, it could be complex, but a trade like this, like Apple, NASDAQ, because it's so sophisticated that not many people will put in the work to even understand a wave like that. Okay, that is why most of our traders are losing money, right? And all you have to do is capture a wave like this, a wave like this, a wave like this, right? For beginners, it might look like a mess, but if you break it down into a few wave counts based on your trader's report, okay, simplify your trading criteria process. Okay, I believe that you can be profitable in the options market. All right. So I believe you have 30 seconds to go before the market opens. So although I'm not hearing anything, probably it's the chat function. Anyways, this webinar is recorded, so I'll be uploading it on tomorrow. And my apologies if you know, the platform is not so user friendly for Q&A sessions. I'll try to improve it next round. Okay. So I hope you enjoyed today's webinar. And if you have any questions, please drop me an email. Okay, so I do enjoy hosting this webinar, and I hope to see you on the next online course of video update. Right?